Ever wondered what Bitcoin halving is and how it impacts the market? Let's shed some light on this intriguing phenomenon. Bitcoin halving, in simple terms, is a process that reduces the number of new Bitcoins generated by the network. The term halving comes from this reduction, as the rewards that miners receive for verifying transactions are literally halved. This means that the rate at which new Bitcoins are created is slowed down significantly. Now, you might be asking, how often does this happen? The answer is roughly every 4 years. Bitcoin's code was designed this way to control inflation and maintain scarcity of the digital currency. As you can probably tell, this event can have a significant impact on the market dynamics of Bitcoin, affecting everything from its price to its perceived value. Stay tuned as we'll deep dive into the past instances of Bitcoin halving and its market effects. Let's take a step back and venture into the year 2012, the year of the first Bitcoin halving. The world of Bitcoin was abuzz with excitement and anticipation. As November rolled around, the halving event took place, and the block reward for miners was slashed in half, going from 50 to 25 Bitcoins. This monumental event was a real game changer. It was the first time the Bitcoin community had experienced such a shift, and it fundamentally altered the way Bitcoin was mined and valued. The market reaction was nothing short of electric. Bitcoin's price saw a significant increase, and the overall hype in the market was palpable. People from all corners of the globe were talking about Bitcoin, and the news of the halving spread like wildfire. The world had gotten its first taste of the power and potential of Bitcoin, and it was clear that this was just the beginning. That was quite a ride, wasn't it? But it doesn't stop there. Fast forward to 2016, the year of the second Bitcoin halving. The digital world was buzzing with anticipation. This time, the block reward was cut in half from 25 to 12.5 Bitcoins. This scarcity principle, the idea that when something is less available, it's more valuable, was again put to the test. Just like in 2012, the effects were not immediate but rather gradual. The Bitcoin market didn't react with a sudden surge in price. Instead, it was a steady climb. Over the next year, Bitcoin's price increased by more than double, proving once again that the halving had a significant impact on its value. Moreover, the second halving sparked a renewed interest in Bitcoin. More people started to understand its value proposition, and it wasn't just the tech-savvy ones. The mainstream was now getting a taste of this digital gold rush. A pattern seems to be forming, doesn't it? But let's not jump to conclusions just yet. Now, let's leap into the recent past, the year 2020, the year of the third Bitcoin halving. In May 2020, the Bitcoin universe experienced its third halving event. This meant that the reward for mining a block on the Bitcoin blockchain was reduced by half, going from 12.5 Bitcoins to a mere 6.25. This reduction in supply is a significant event in the Bitcoin world, as it directly impacts the rate at which new Bitcoins are created. In the aftermath of this halving, the market reacted in a rather predictable manner. The reduced supply, coupled with a steady demand, led to a significant rise in Bitcoin's price. The price surge wasn't the only notable outcome. This event also sparked increased adoption, as more individuals and businesses began to recognize the potential of Bitcoin as a store of value and a medium of exchange. 3 halvings, 3 price surges. Coincidence? I think not. So, what have we learned from these Bitcoin halving events? Well, we've seen that Bitcoin halving is a significant event in the life of this digital currency. It's an automatic process, halving the reward for miners every 4 years, effectively reducing the rate at which new Bitcoin is created and thus controlling inflation. More importantly, each halving event has had a profound impact on Bitcoin's market value. In the past, we've seen a pattern. A surge in Bitcoin's price following each halving. In 2012, 2016, and 2020, the price rose dramatically within a year or two of the halving. This pattern has led to a lot of speculation around future halving events. Many believe that the next halving could trigger another price surge, but remember, the world of crypto is unpredictable and the past performance doesn't guarantee future results. Will history repeat itself in the next Bitcoin halving? Only time will tell. Until then, keep exploring the fascinating world of crypto.